in this concept of income from house property, what we are going to do is that we are going to make a very quick revision. So section 22 speaks about chargeability. So first of all, what is meant by income from house property? Very simple. Whatever the income, that is rent which you receive from the house property, would be considered as income from house property, and that income would be taxable under the head income from house property in your income tax. Very well. Okay. Section 22 speaks about the chargeability, and for your income from house property to be taxed, first we need to understand what is meant by house property here. Okay. And whatever the property, house property here means, it can consist of building or land. And the building can be residential building, it can be commercial building, it can be a factory building, go down, anything for that matter. And land should not be a separate vacant land. Land means the land which is connected with the building, like the garden, garage, etc. Remember, the assessee must be the owner of the property, and the property should not be the assessee should be the owner of the property, and he should make sure that the property should not be used by the owner for his business purpose. What if he use it for residential purpose? Are absolutely accepted, but can he use it for his own commercial purpose? No. If he uses it, then he can't pay rent to himself. No. Hence, that point is not covered here. Whatever the property is calling it as, it can be land or building, and it has to be the owner's property only. He can't use it. If he's using for his business purpose, then you can't put it under your income from house property. Okay. Property held as stock in trade is also considered as property, provided you need a point to be understood over here. Okay. Stock in trade, you have seen the apartments. No, there will be many flats, and the flats would be considered as inventory for the business, for those people who are constructing. This is nothing but the PGBP income for them. That is nothing but the inventory. If you treat it as inventory and it is vacant for a period up to 2 years, then you have no problem for life. You can just keep it as vacant as it is. If it is vacant for a period more than 2 years, if your stock in trade is vacant for a period more than 2 years, then you have to treat it as the DLOP, deemed to be let out property. The concept of DLOP also we are going to look at. Okay. Composite rent means along with the rent. See, some places what happens in the near the tech parks and all, some people would prefer the comfort along with staying in a place. Like they need, they'll not be having time to wash clothes, they need washing machine, they need fridge to keep the refrigerator, to keep the edible items fresh. So what they would do is that they would keep that, and they would provide, along with providing the houses, they would also provide you the comfort for the house, like providing the furniture, providing refrigerator. That is another other assets for that matter. In that case, what happens, if you are providing a rent, property on rent, you are getting rent from this property on one side, and you are getting rent from this assets which is used on other side. Correct? That is what composite rent. And in this case, what happens, rent for the use of the property, that is income from the house property, and other charges you are going to classify it as PGBP. Let's see. Suppose you are providing the property on rent. Okay, that is only property, not the assets inside. And you are coming and you're telling, I like the house, ma'am, but I don't want any assets. That is whatever the furnitures and all you're providing, I have my own, I don't want it. If I being an owner, if I'm stating, okay, fine, no problem, then it is called as a separable. That is, I'm letting building also, and I'm letting the other assets also. That is, I'm not giving a clause over here. If you're buying, if you're taking the property on rent over here, you have to take this also. No, I'm not telling anything like that. I'm telling, okay, take it separately. If it is separately letting, then to the extent of property rent, whatever you get, it will be taxed under the head income from house property. And for the asset which is provided, it will be either PGBP or income from other sources. Now we are coming and telling, I like the property, but I don't want the asset, I already have it. Now I'm telling, no. If you're taking, you have to take both. You have to take the asset also, you have to take the building also. In that case, what I'm stating, I am making it as inseparable. So this is basically prima facie my business. So I'm going to treat it as my PGBP or income from other sources, depending on where I'm going to treat it as. Okay. Income from house property, if that property is situated outside India for that matter, you have a property in China. So now you are a resident in India, but you're having a property outside India, being making the mistake of you being a resident in India, you pay the tax. That is, global income would be taxable. What if this is RNOR or NR? I am an RNOR or NR and I have a property outside India. It is going to be taxable only if it is taxed in India. This we have seen in the concept of the residential status and the scope of total income. Okay, the format of income from house property is very, very simple. Simplest chapter here. That is GAV, gross annual value. Municipal taxes will be deducted. You will get NAV. On that, you are going to take section 24 deduction, that is 24A. Standard deduction at the rate of 30%. And interest on loan standard deduction under section 24B. And you will get the income from house property. How do you determine GAV? Very, very simple. You are going to determine the step number 1, fair value, fair rent, or the municipal rent, whichever is higher. Whatever the answer which you got in step number 1, you would take it in your step number 2, whichever is lower. And in your step number 3, whatever the answer which you got in step number 2, you are going to compare that with your actual rent and you are going to state whichever is higher. What do I mean by this? See, actual rent, always consider actual rent to be actual rent minus the unrealized rent. What is unrealized rent? Very simple. You have made all the efforts to recover the rent from that fellow. That is one stubborn fellow. Whatever you do is not giving you the rent only. He is telling that I don't have money and not give. So what you have done, prima facie, there are certain conditions to be satisfied. Okay. First, you have given the property on rent, property to collect rent only. Your prima facie objective is to collect rent. Second, you have made the efforts to move that fellow out of your premises. That is nothing but you have given the notices or you have given the complaint or anything for him to move out of the property. You have tried everything to recover the rent. It was not possible. Ultimately, you have made him to move out of the property. And again, you have not told him, you are staying in the ground floor. Ground floor gives me 20,000 rent. To go and stay in the top floor. It just gives me 10,000 rent. You're not making him move from one house to another house of your property. You are just asking him to move away. So in that case, what happens? Actual rent minus the unrealized rent, whichever is higher, you would take it. Okay. So this step number 1 or step number 2 or step number 3, you have to go in sequence only. Fair rent or the, repeat after me, fair rent or the municipal rent, whichever is higher. I can't get into in-depth explanation about it. It is a quick revision. So we are moving forward. Step number 2 or your standard rent, whichever is lower. Then your step number 3 or your actual rent, whichever is higher. So these are the parts. Determination of annual value. What do I mean by the determination of annual value? Is very, very simple, people. When you have same property, when you have different properties like that, you are going to understand once we solve some few questions from your income from house property chapter, not to worry about. Now let's try to understand in case of deemed to be let out property. Okay, so basically you have self-occupied property and deemed to be let out property and let out property. 3. In case of self-occupied property, what happens? You have constructed the building and you yourself have occupied for your residential purpose, not commercial, residential purpose. That is going to be called as SOP. LOP means let out property, means you have given it on rent. Deemed to be let out property means even though you are not collecting rent from it, still the department decides that is going to be all the LOP provisions will be applied to it as a deemed LOP. That is what it means. See, suppose you are a very rich fellow and you have some 5 self-occupied property. You have kept farmhouses everywhere. Here one farmhouse, Bangalore, one Mysore, one in Mumbai, one Maharashtra, one. You have kept many farmhouse for that matter. So now you are having 5 properties and you have not given it on let out. You have just, you are thinking like when I go for a meeting over there, I want to stay in that place, I want to stay in this place. You are thinking of it and you are staying. Okay. So now if you own more than up to any self-occupied property, it is not that you have to consider that only first property, only second property only. No. In case of DLOP, you can consider any two out of your total properties, SOP properties as your SOP only. Any 2 properties you can take. That is, SOP property, all of us know the GAV is nil. Because there is no money coming in case of SOP. You yourself are staying here. You will give rent for yourself and make it as taxable. Huh? No, right? So, SOP property, the GAV will be nil. What about others? They deemed to be let out properties, the GAV would be the expected rent. Why do I call it as expected rent? Very simple. See here. fair rent or the municipal rent, whichever is higher. Whatever the answer which you got, or the standard rent, whichever is lower. The answer which you get in your step number 2 is called as expected rent. This or this, whichever is higher. In case of DLOP, deemed to be let out property, you are not receiving anything as actual property. It is only expected rent which will become your answer. That is why I have written here directly. That's it, nothing else. Clear? Now, unrealized rent point we have seen here. Property taxes. Remember, in case of municipal taxes, you have to satisfy two conditions. That is, it should be actually paid. Money should be actually paid. You should have actually paid the money. It is not that you have not paid, it is that you have paid. Okay. Actually paid by the owner and during the PY. Suppose, let's consider you have paid the arrears. Last 2 years, you had some arrears of municipal you did not pay, and now you wish to pay. Can you do that? Yes, absolutely you can do that. Correct. You can absolutely do that. You can absolutely pay. Whatever you have paid during the PY, it might be for 1 year, 2 year, 5 years or 10 years, entire thing you can take it as a deduction. It should be actually paid. What if you paid for the subsequent years? Subsequent years in advance, you are paying for the next year. Municipal tax you are paying in advance means that is not going to be allowed. It is going to be allowed in the year in which it is going to be, that is allowed in that respective year only. Only arrears paid during the year, this year's this year's property tax which you have paid will be considered. Okay. Section 24 speaks about Section 24A standard deduction and Section 24B interest on borrowed capital. 24A is very simple. 30% of NAV is allowed as deduction. What do I mean by 30% of NAV is allowed as deduction? Whatever is your NAV that you get, that is GAV minus municipal tax, whatever the amount you get in NAV, on that 30% you can take it as a standard deduction. That is a flat deduction you can take. Correct. And in case of 24B, interest on borrowed capital, this is the most important thing in this entire point. Okay. Section 24B means interest on borrowed capital. Interest on borrowed capital, I have borrowed some 10 lakh rupees. Now I have to pay the interest. How does this interest starts and how do you consider this interest would be the point. Okay. See, this interest on pre-construction period, we can understand this concept of interest on this borrowed capital with the help of this example. Okay, we'll take this question and we will clear that concept along with this question so that it will become easy. Mr. Vikas owns a house property. This is a test your knowledge question from your material. Mr. Vikas owns a house property whose municipal value, fair rent and standard rent is given fine respectively per annum they are provided. During previous year, financial year is nothing but the previous year for our concern, 24-25, 1/3 of the portion of the house was let out for a residential purpose for a monthly rent of 5,000. So 1/3 is let out and 2/3 is SOP. Okay, 1/3 is let out means LOP means remaining is SOP only, no? Okay, the remaining 2/3 self-occupied given. Municipal taxes is 11% of the municipal value. Fine. The construction of the house began in June 2017 and was completed on 31/5/2020. Mr. Vikas took a loan of 1 lakh on 1/7/2017 for the construction of the building and he paid interest on loan at the rate of 12% per annum and every month such interest was paid. Compute income from the house property of Mr. Vikas for AY 25-26 and yes, that's the option of shifting out of default tax regime. Very well. See, this fellow began the construction in June 2017 and completed on 31/5/2025. He took a loan on this day. See, as per section 24B, you are going to classify the interest as something called as pre-construction interest. Pre-construction interest, basically it will start from the date of taking loan, that is commencement of loan or the commencement of the construction, whichever is later. It starts from those two categories, whichever is later, and it ends in the year preceding to that particular year, 31st March of that relevant previous year. So let's take it one by one. So first of all, tell me, when was the loan taken? On 1/7/2017. That is nothing but July. The construction began in June. So you have to take whichever is later only. So you will take July as the starting point. The ending point would be 31/5/2020, right? But for the purpose of income tax, to calculate the pre-construction interest, you're not going to take 31st March, 31st May 2020. See, which is the 31st March immediately preceding that PY. This PY, which is the 31st March, which is very much nearby 31st March, that is completed 31st March, 31st March 2020, no, 31st March 2020. So your pre-construction starts from date of commencement or date of loan borrowed, whichever is later. Date of commencement is June, date of loan borrowed is 1/7, whichever is later, this would become 1/7/2017 becomes the point. Date of completion of construction is 31st March, but you're not going to take till 31st March. You're going to end it till 31st March, which is the immediately preceding completed one. 31st March 2020. This becomes your pre-construction period. Period. I'm speaking about period. Okay. Now, when I start calculating, all of us know how to calculate this one. From this to end till 31st March 2018, it is 9 months. So, I have taken the calculation. Loan borrowed was 1 lakh and the percentage is 12% given in the question. So, till 31st March 2020, I have to calculate the interest means. So in this case, you're going to take till 31st March 2020. So this 3 years you have calculated and you have got the total interest on the pre-construction period. Okay. Interest on the pre-construction period for total, you are going to take it as 1/5. Interest on pre-construction period, whatever you have calculated, will be allowed as deduction. 1/5. 1/5 will be allowed as deduction. That is nothing but it will be divided into 5 equal installments. Can I call it as 1/5? And I'm going to record 6,600 as pre-construction period. Array, in this year, that is PY 24-25 also, she might have paid some interest, That is in PY 24-25, he or she has not repaid the money. So 1 lakh into 12%, 12,000 rupees, so interest you have to pay, plus 6,600, which is considered here. Simple. And the total interest allowed for PY 24-25 would be 18,600. However, 1/3 is only LOP, and remaining 2/3 is SOP. So based on that, you do the proportion, you will get the answer. Correct? This was something different in this particular concept. Apart from that, everything else is the same. Okay. Now. So the other things are in the questions are simple. However, we know for SOP there is no GAV. Municipal taxes is also not there. Obviously, NAV will be nil. 30% standard deduction you don't have. Interest on loan, you do have the interest on loan, the calculated part just before. And you have loss from SOP. And in case of LOP, you have 5,000 rupees as the rent which is provided for 12 months, 60,000. And municipal taxes is 11% of the municipal value. So in the question they have given, see here. 11% of the municipal value is 96,000. So 96,000 into 11%, but wait, you have to take only to the extent of LOP properties, 1/3. In the question they would provide, if they provide it as identical space, identical area, identical units, consider it as 50/50. In the questions they provide 1/3, 4/3, 6/7. You please take it as provided in the question. Okay. Anyway, you have deduction under section 24-24A, you have 24B, you have calculated and you have got, and then you got the income from LOP. That is nothing but this plus whatever the minus you have, that final answer you will get it as income from house property, A plus B. Clear? So GAV calculation, so you already, all of us know, right? If fair value of the municipal rent, whichever is higher, this or this, whichever is lower, and again this or this, whichever is higher. Then last, so we have done the proportion, 1/3 proportion you have taken, and then you have got whichever is higher portion over here and considered the tax portion there. Clear? Everyone? So whatever the notes which you can see, this you can find it in my Telegram channel. You can go and join there. All the free resources, whatever material I use, any videos you watch of my channel, any topic you want, it is provided in my Telegram channel. Capital gain, PGBP, your deductions, your set off and carry forward, whatever concepts, material you want, textbook you want, handwritten materials you want, everything is provided in Telegram. I don't keep anything to myself. I share everything in Telegram. Okay, great. Let's get into the concept one, and then we will get back to the this point. Okay, now see, here also it's provided. If you want, means you can take a screenshot of this one. Similar point with the different dates has been provided here. Okay. Okay. See, if I'm speaking about the municipal taxes, just a moment, people. There is some glitch. So, the deductions in respect of the self-occupied property, people see here. In case of SOP property and in case of LOP property, what happens? Whatever the interest calculations you do, see how do you move the process of calculation of your interest on loan is that under section 24B, interest on borrowed capital is allowed as deduction. Correct? All of us know about this. How do you do that? First, you will see whether is there any pre-construction interest coming in the question. If it is yes, please do the calculation as we have seen earlier in that question. Okay, after doing that calculation, if there is SOP, if there is LOP property, no problem at all, you will fully allow it. In case of SOP property, there are certain restrictions provided you satisfy certain condition, you have higher limit of the interest on borrowed capital which is allowed. That is where the loan is taken on acquisition or the construction of the house property. First of all, if you want the interest on loan, maximum of 2 lakh to be allowed, you need to satisfy these three conditions. What are those? Loan should be taken for house property only. Loan should be taken on or after 1/4/1999. And the acquisition or the construction, you should have completed it within 5 years from the end of year in which the capital was borrowed. Suppose you have borrowed the capital on, let's consider on 1st of November 2020. Okay. The financial year which is ending is 31st March 2020 in the my example. From this year, considering within next 5 years, you should have completed your construction. If the answer to that is yes, then you can take this maximum of 2 lakh. What if you don't take, what if any one condition is not satisfied, then maximum 30,000 will be allowed. Okay. What if you have taken loan not for construction or acquisition but for renewal, repairs, etc.? At a maximum 30,000 is allowed. Don't worry, you take it. Okay, the department is like, don't cry, take 30,000. And in case of 115 BSc, very important point, you don't have any interest allowed as deduction for SOP properties if you're following 115 BSc. You have no problem, no difference in your whatever understanding if you are following 115 BSc and you have let out property. SOP property only interest is not allowed under 115 BSc, but under LOP property it is absolutely allowed. Okay, 24A is also allowed, 24B is also allowed. And in this case, wherein, see, suppose what happens sometimes, that fellow, you asked him the rent, that fellow did not give you, recorded it as unrealized rent. You are like, take that on the get lost. Unrealized rent, that fellow did not give you. After some 5 years, he got some realization. After doing some meditation, he comes back and he gives you the amount. You are surprised, this fellow came and gave you the money. Now, department is also very happy that you got the money because they want their share. That is taxable. Yes, unrealized rent will be taxable in the year in which it is actually received. In which year it is received. But however, you will get 30% deduction under section 24A. You have no problem for that. But apart from that, you will have nothing else. You have to make it as taxable. If you get a question from this one, very simple. Whatever is the unrealized rent you got after some years, take that minus the 30% deduction you do. Whatever the answer you get, this will be your final answer. You take it and put it in the outer column. That's it. Okay. Treatment of income from co-owned property. What do I mean by treatment of income from co-owned property means? I and my husband Athava, or you or your wife, you or your husband can own the property, can co-own the property, no? So what happens when it case of co-owning the property, self-occupied property or let out property? In case of self-occupied property, if I being a co-owner, all of us know the maximum deduction which I will get in case of self-occupied property is 2 lakh, correct? For one property, you might have paid a, let's consider interest of some 4 lakh, okay? I can take 2 lakh rupees and my husband can take 2 lakh rupees as well. This is an added advantage. What if I have two properties? I have two properties, okay? One property I'm paying 4 lakh rupees as interest and another property I'm paying 1 lakh as interest. Can I now take 2 lakh plus 2 lakh being an individual, me being an individual? No, not possible. The 2 lakh limit is per person, not for per property. It is per person. Total you can take it's only 2 lakh. So consider taken very well. Section 27, deemed ownership. In this case of deemed ownership, it's a very basic concept. You just give it a one-time read. That's it. It's not so important. Let's do some questions which are there in house property. Okay, we have done this question number 3. People, this is a very, very quick revision. We are not going to do something in depth over here. We'll try to take it slow as possible, but our intention behind this video is very, very quick revision. Okay. Mr. X owns one residential house in Mumbai and the house is having two identical units. And first unit is self-occupied by Mr. X and the another unit is rented. Okay. The rented unit was vacant for 2 months during the year. The particulars of year is provided. Standard rent, municipal rent, fair rent information is given. Municipal tax is given very well. Light, water charges, interest on borrowed capital, all this information given. What they've asked you to find the income from house property for AY 25-26 if he exercises the option to shift out of default tax regime. Very well. See, first of all, what you need to do is that they have given you certain information. You need to find the GAV for that very, very soon. See here. Income from house property, you have to find the GAV. How do you find the GAV? Fair rent or the municipal rent, whichever is higher. So in this case, in the question, 1,85,000 is given. 1 by 2 you will take. Why? Because it is an identical unit given in the question. So 1 by 2 you will take out of this one, whichever is higher, 95,000, you will take it as the second answer. You will take it in the second step. Or the standard rent, whichever is lower, you will take whichever is lower, 81,000. 81,000, now you have to give it a little pause because the actual rent, whatever you are calculating, now there is some reduction in the actual rent because, for what reason? Because of the vacancy. See, your GAV is greater than or equal to your actual rent if it is because of vacancy. There are certain provisions that you need to consider. See, if your actual rent 8,000 rupees is less than your expected rent. So see people, how much is the rent that you are expecting? Where is it? Rent per month. Here it is. 8,000 per month, no? 8,000 per month you're expecting and 2 months is what? 2 months is vacant. Now you have to apply a special provision over here. That is if your actual rent now is less than your expected rent, 81,000. For what reason? Due to vacancy. Suppose let's consider there was no vacancy. Your answer here would have been 96,000. That is 8,000 into 12, 96,000. Then your actual rent would have been higher. No, consider there is no vacancy at all. What you would have done? You would have considered it as 96,000, whichever is higher. You would have recorded 96,000 as your taxable amount. Like a good person you have done, no? So department is like, if this is happening now, the vacancy is caused not because of something wrong from your side. You have kept the property ready, but that fellow did not come and take the rent. No. So we'll not punish you with whichever is higher. We'll just keep your taxability to your actual rent only. Your GAV will become your actual rent only, 80,000. Okay. So 80,000 I considered. Municipal taxes, consider 5% of your municipal value and into 50%. Why? Because half is SOP and half is LOP property. LOP property you have taken NAV, and 30% interest on capital given in the question. That is whatever interest, where it is Interest on borrowed capital 1,500 per month you have taken, and 50% is relating to SOP and 50% is LOP you have taken, considered in income from LOP property you got. JV deduction under section 24, interest on capital you have taken, loss from SOP also you have, income from house property also you have, and this is the SOP property and this is the LOP property you have taken, considered and closed. Okay, second question we have done. First question, people, question number 1 is very simple. I will give you a very quick go through. Okay, Mr. Raman is a co-owner of this house property along with his brother. So there is a co-ownership considered. You have to make sure that whatever is the co-ownership, you are going to split that at last. Okay. Municipal value, fair rent, standard rent, actual rent is given. You will calculate the GAV very well. The loan for the construction of this house is jointly taken and interest charges 25,000, out of which 21,000 has been paid very well. Remember, there is no provisions mentioned in the income tax that it has to be paid only. Interest has to be paid only. You can consider the deduction of interest on borrowed capital. Even if it is payable also you can consider, no problem. So enter 25,000 you can take, yes you can take. Interest of on the unpaid interest. See, you are supposed to pay the interest, you have not paid, but that interest is being paid for the purpose of loan which is being borrowed by the house property, correct? So that interest paid payable you can consider. You did not pay it on time and you end up paying extra interest. That is not the problem of the government. That is not the problem of the department. That is your problem. So department is like, you have done some, you have not complied with the provisions, or you have not complied to pay the interest on time. You are a bad person. Will not give this. See what happens. I might take a loan of 1 lakh rupees from one person, from one bank, and another bank, the first bank which I took the interest, I got it for 22%. Let's consider. The other bank I got it for only 20%. I will be saving 2% of interest per annum. No, so what I will do, I will take the interest, I'll take the loan from the another bank, bank B, and I'll repay the bank A loan. But the primary intention of what I've taken from bank A was for the house property construction only. So now whatever the interest which I end up paying for bank B, that will also be considered or added to my interest on borrowed capital, which will be allowed under section 24B. I hope this is understood. Okay. I hope this is understood. So Raman and his brother have taken fresh loan, and interest charge on this loan is 5,000. Municipal taxes is 5,100 and have been paid by the tenant. You have to consider. Very simple here. The calculation goes only with the interest. That's an important point. 25,000 you will take, 5,000 you will take, 450 you will not take. You will add these two, you will take this, and you will subtract the 30% of the NAV and this one up with 1,80,000, and then you will get the income from house property 96,000. Make sure that you are splitting that 96,000 rupees to Raman and others. If they give any information as identical or anything 1/3, 2/3, take it. Otherwise, please take it as 50% and close. Okay, I've done question 1, 2. Question 3 is also done. Okay, we'll do question number 4. Mrs. Rohini Ravi, a citizen of the USA, and is a resident and an ordinary resident in India during the financial year 24-25. She owns a house property at Los Angeles, USA, which is used as a resident. The annual value of the house is $20,000. The value of $1 may be taken at 75. She took the ownership and the possession of the flat in Chennai on 1/7/2024, which is used as self-occupation while she is in India. The flat was used by her for 7 months only during the year ending 31st March 2025. The municipal valuation is 3,84,000 and their fair rent is 4,20,000. She paid the corporation tax, property tax, the village tax also she paid, and from the Standard Chartered Bank in June 2022 she purchased, and prior period interest and the interest portion is given. She had a house property in Bangalore which she sold in March 2021. In respect of this, she received some arrears of rent in March and the amount was not charged. So you have to calculate what is the rent which has been considered by Rohini. Okay. So first, what happened? She is an ROR in India and she owns a property in Los Angeles which is used as a resident. The annual value of the house is $20,000. $1 is 75. It is used as a residence, Los Angeles property. It is nothing but SOP. No, there is no interest involved. There is no JV involved over here. JV is however nil. municipal taxes is nil. There's no interest involved. So the Los Angeles property is going to be nil. Okay. And what happened? She purchased a property flat in Chennai, which is used for self-occupation while she's in India. As she is using for self-occupation, here also it is going to be considered as nil. GAV is going to be nil, but she has some interest that is paid. She has some interest that she has paid, and for the property, purchasing this property, for purchasing this flat, she has taken some interest. And what is that interest? She has taken pre-construction interest of 49,200. Where is it? It's here only, no? See, when she has purchased, it is in June 2022. Correct? Period. That is, she has taken a loan from the Standard Chartered Bank on this date, but she has purchased the flat on 1/7/2024. So it has to be prior to that. Prior period interest is something, the loan taken date or the possession of the flat, that is the construction date, whichever is later. This is later. So whatever the interest which goes beyond that will become your pre-construction interest. 49,200 is your pre-construction. Very well. 1/5 is allowed as pre-construction interest. You take it. And interest for the PY, this is not 23-24. This is for 24-25. It's going to be how much? It's going to be 50,800 plus 1,31,300. How did I get this? It's there in the question here. I did not do anything. It's there in the question. You just need to bifurcate. You add it and you get the total interest allowed, and the total interest, whatever is considered, you'll take it for the Chennai property as the allowed property. Okay. And in case of arrears of rent, I told you, if you remember, arrears of rent, you just take the arrears, subtract 30%, you will get the answer. Now, whatever the answer you get, A, B, C, that is from the property of Los Angeles, Chennai, and the arrears, you take it and you close it. Okay. Next. Two brothers, Arun and Bimal, are the co-owners of the property with equal share. The property was constructed during the financial year 16-17. The property consists of 8 identical units and is situated at Kochi. During the financial year 24-25, each co-owner property 1 unit residence and the balance 6 units were let out. So can I say, out of the total, these two persons are co-owners of the property, and there are identical units, 8 identical units, and out of 8, this fellow has occupied one, this fellow has occupied one, and this fellow has occupied another one. So can I say this fellow has occupied one, this fellow has occupied another one? So out of 2 out of 8 property is SOP, and 6 out of 8 property is LOP. If you take it in the percentage, you will get 25% SOP and 75% LOP. Keep it simple. Understanding, everyone? Great. Each co-owner occupied 1 unit of residence, and the balance of 6 units were let out of rent of 12,000 per month per unit. The municipal value of the house property is 9 lakh, and the municipal taxes is 20% of the municipal value, which were paid during the year. The other expenses are as follows. Repairs given, premium paid given, interest payable on the loan taken for, that is for the purpose of house construction, given. One of the let out units remained vacant for 4 months. Very well. Arun could not occupy his unit for 6 months as he was transferred. This is of no importance for us. The other income of Mr. Arun and Bimal is respectively, compute the income from house property if they pay under default tax regime and if they opt out under the default tax, out of the default tax regime. You have to take and calculate both. You have to consider the default tax regime also. You have to consider the other option also. Understanding, everyone? Clear? Now, so if the Arun and Bimal pays tax under the default tax regime, doesn't pay under the default, that is pays under the normal provisions. Before that, let's do the calculations of your LOP property. Okay, 75%. See, in case of LOP, what happens? You have to consider the GAV, no, that would be a starting point. Fair value is given, municipal rent given, you will consider whichever is higher. If something is absent, you will put an hyphen for that. You will take the other option. You will take the same thing which is there, like out of these two. You don't have this, so you have this. You just take this to your next step. That is how you solve any sort of question. If something is nil over here, you take the other point. Step number 2, or the standard rent, whichever is lower, you will take it, or expected rent or the actual rent, whichever is higher, you will take 8,16,000, and 8,16,000 would be a starting point. You will pay the municipal taxes that is relating to LOP property is 75%, no, and SOP is 25. So you will take 75% over here, and NAV you will get. Standard deduction under section 24 you will consider 30% of NAV. Interest on loan is also provided. Interest from LOP is also, you got the interest from LOP, sorry, income from house property, that is LOP property you got. And in case of SOP properties, first we will do it for normal provisions, okay. In case of normal provisions, you already know interest on loan given in the question is 3 lakh. 50% is your each person's share. Out of 3 lakh, each person's share is 50%. 25% is SOP property. 25%. Total interest of out of 3 lakh total interest. 25% is the SOP related. And each person will get 50% ownership in it, 50% deduction in it. So 37,500, 37,500. LOP property, you have income from LOP property, and the net figure will be your income from house property. You will add other income and you will get this so much. What happens in case of your default tax regime is that people in SOP, you have no interest deduction. Everything will be nil. Everything, any question, SOP property for 115 BAC, it will be nil. Okay. Your final answer should be nil only. For LOP property, we have already calculated. You will add the other income and then total will be your income from house property. And that is your total income for that matter. So these are your test your knowledge questions from your institute material. Important questions, so we have covered.